Morning, Bill, here with the Metals Minute. Today is Wednesday, December 28th, 2022. Well, we have gold reaching a 6-month high yesterday on Tuesday on news that China is reducing their COVID restrictions and trying to open their economy back up. So that's seen as good news economically worldwide, and gold caught a bid on that and rose to a 6-month high, the highest since the end of June. So we also have news out of Russia that the largest bank in Russia, Sberbank, is opening has opened a gold-backed digital financial asset, or DFA. And they see this as a way of the future, and their target market for this is the Treasury Department of their corporations that are looking for a safe place to stow some money, and the DFA will respond to the price of gold. So they see it as a way that companies can put some of their cash in something that will have some inflation protection. And so that's on the market now. And we expect that trend to continue. It doesn't have to be digital assets or gold. Sometimes it's both in the case of this new issue there in Russia. We also have some interesting information from a traditional gold bear, JC Parets. He runs the charting service All-Star Charts, and he's a certified market technician, and he's traditionally been a bear on investing in gold and gold prices. But as he has watched gold throughout this year and he has seen the downturn that's happened in other assets, he's noticed the strength in gold. And so that's been an impressive feature to him. He also has noticed that those that traditionally hedge the gold price, such as jewelers, and what happens is jewelers try to protect themselves from a rising gold price, so they buy options on gold that allow them to purchase gold at a certain price, no higher than a certain price. And so that tends to keep the price of gold padded down. Well, he's noticed that those traditional hedgers have removed their hedges. They're buying a lot less hedges than they were before. And so that tends to allow gold to rise more quickly and to a higher height. And therefore, he believes gold will reach 5,000 sooner than most people expect, is his quote on that. And we have a link to that article for more information there. We've also seen gold serve a role as a predictor of inflation. You know, traditionally people look at bonds as a predictor for inflation, and sadly they didn't perform that role really well in the last few years. It kind of left people unprepared for the inflation that we see now. However, gold has done a great job predicting the inflation with its price movement, and over the last 4 years gold is up 42%, and that compares nicely to the 18% inflation that has accumulated in the United States over that time. So gold has done a really good job protecting investors from inflation over the last 4 years. Incidentally, the report from JC Parets also believes silver is going to do well in the months and years ahead. So stay tuned, and we'll keep an eye on what's going on. Thank you for tuning in. If I don't see you, Happy New Year.